Your crypto gains just got wiped and the Fed hasn't even spoken yet. Bitcoin slipped back towards 64,000, while Netflix tumbled 8%. Friday, July 17th, 2026. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight. Up next, market snapshot. It's Friday, July 17th, and the week is ending on a sour note. The midweek relief rally has rolled over. After two cool inflation reports sent crypto ripping and Bitcoin back to 65,000, the momentum faded hard. A global chip rout, a disappointing Netflix report that sank the stock about 8%, and oil still stuck near $85, have dragged the major stock indexes toward their first losing week in a stretch. Crypto is cooling with the mood, with Bitcoin back around 64,000, though Ethereum is once again holding up better than almost everything else. Cooler inflation is still the bull's long-term friend, but in favor of higher rates Fed, and two wars keeping oil high are the reason this bounce ran out of steam. That brings us to macro and central banks. Let's read the tape. In crypto, Bitcoin has eased back to around 64,000 after touching a three-week high near 65,000 midweek, while Ethereum is the relative winner, holding near $1,900 and still outrunning Bitcoin. Stocks are limping into the weekend. On Thursday, the S&P 500 fell about 0.5%, the Nasdaq dropped roughly 1.5%, and the Dow slipped about 100 points, dragged down by a nearly 4% slide in semiconductors. Futures fell again early Friday, with Dow futures off more than 300 points, and Nasdaq futures down about 1%. The big single stock story is Netflix, down roughly 8% after soft company outlook, while Intuitive Surgical tumbled about 10%, and even United Health's earlier beat could not hold the tape up. Oil stayed firm, with Brent near $85 and U.S. crude near $80 after fresh strikes on Iran. Gold steadied around $4,050, and the 10-year Treasury yield eased to about 4.5% as the dollar softened. South Korean markets were closed for a holiday. The takeaway: a rough end to what began as a hopeful week. But even with good inflation news, global political conflicts are keeping oil prices high and limiting how far risk assets can run right now. Step back in the week told a split story. The good news was inflation. June consumer prices fell on the month, the first monthly drop in 6 years, dragging the annual rate down toward 3.5%, and core inflation cooled to about 2.6%, softer than expected. Then wholesale prices fell too. Together they crushed the odds of a July rate hike, from over 40% down to around 10%, and revived talk of eventual cuts, which is exactly the fuel crypto craves. The bad news was the Fed itself. Chair Kevin Warsh spent 2 days before Congress refusing to soften, vowing to defeat inflation, and declining to promise any cuts. Traders still price a real chance of a hike by the fall in part because oil keeps climbing on the war. Today brings the last data of the week, with the preliminary read on July consumer investor mood from the University of Michigan, plus June housing starts and industrial production. Yesterday's retail sales already came in soft, an early hint the consumer may be cooling. Next week, the Fed's preferred inflation gauge, core PCE, will test whether this cooling is durable, while another wave of tech earnings tests the AI trade. The message for crypto holders is unchanged. The inflation trend is finally friendly, but the Fed is refusing to hand over the easy money, and until it blinks, every rally has to prove itself. This supply squeeze is directly reflected in commodity prices today, especially oil, which remains stubbornly high despite weak demand outlook globally right now. The wars are the reason oil and inflation risk will not fully stand down. On the Iran front, the U.S. has kept striking, hitting missile, drone, and naval targets over several nights, and reimposing a naval blockade on Iran's ports near the Strait of Hormuz, the channel that carries about a fifth of the world's oil. President Trump dropped his threatened 20% toll on ships crossing the strait, but shipping traffic is still sharply reduced, and the fighting continues. On the second front, Ukraine keeps pounding Russian refineries, export ports, and shadow tankers with long-range drones, choking Russian supply and stoking fuel shortages inside Russia, even as Russia bombards Ukrainian cities. Thousands of seafarers remain stranded around the Gulf. Israel has signaled it is ready to strike Iran again, and each fresh salvo risks widening the conflict. Two simultaneous conflicts, both squeezing crude, are why oil sits near $85 despite a fragile global demand outlook. For crypto and gold, the chain is direct. War keeps a floor under oil keeps a floor under inflation, and sticky inflation keeps the Fed in favor of higher rates, which caps how far risk assets can run. Markets are betting neither war escalates over the weekend, but that is exactly the kind of bet that can unravel fast. Treat every fresh headline from either front as fast-moving, and until confirmed, unconfirmed. Which leads to Crypto Pulse. Oil is the thread running through everything, and it is holding firm. Global Brent crude is sitting near $85 and U.S. crude near 80, little changed on the day but still elevated, after the latest American strikes on Iran, and the reimposed naval blockade kept the supply premium alive. Layer on Ukraine's steady attacks on Russian energy, and the market is short of spare supply from two directions at once, which is the single biggest obstacle to the Fed easing, and the biggest cap on this crypto rally. Gold, by contrast, has gone quiet, steadying around $4,050 after a violent week that saw it crash below $4,000 and then bounce. It remains down about 26% from January's record near $5,600. Silver held near 58. OPEC has trimmed its demand forecast, and the International Energy Agency sees consumption slipping this year. Yet war keeps overriding the negative on prices, demand signal. The pattern says it all. Even on a risk-averse day, gold is not rallying as a haven, because the market is still trading inflation and interest rates rather than fear, and crypto is moving right alongside the risk assets. Earnings season is in full swing, and this round leaned negative hard with Netflix tumbling 8%, adding pressure to an already shaky chip sector that dragged major indexes lower today, as we saw earlier in the report. This segment captures the market's cooling after a strong week. While Ethereum leads, the broader crypto rally is losing steam. Bitcoin has eased to roughly $64,000, retreating from its midweek three-week high near $65,000. Despite this decline, it remains up for the week and has broken above the descending trend line that capped gains for a month. Ethereum stands out as the standout performer, holding near $1,900, its strongest level since early June, and continuing to outrun Bitcoin. One strategist now views Ether increasingly as the most compelling way to play this rebound. The positive on prices case rests on two cool inflation prints, a genuine technical breakout, and building momentum behind the Clarity Act, which would provide institutions with clear rules. However, caution is warranted. The Fear and Greed Index remains stuck around 26 in fear territory, indicating a nervous recovery rather than euphoria. While ETF flows turned positive for 2 days, the broader trend still shows net outflows. A risk-averse tape led by chips and Netflix adds pressure that stalls any bounce. Bitcoin dominance holds near 56%. Key resistance sits at $65,000 with support around $62,000. For Ether, $2,000 is the next prize. Solana and XRP drifted lower amid the risk-averse tone. Part of Ethereum's edge lies in its narrative, growing bets that clean U.S. rules and staking demand favor it over Bitcoin in this leg. With Citigroup still carrying an $82,000 target for Bitcoin, this remains a rally that must keep proving itself against and in favor of higher rates Fed. Here's closing summary. Earnings season is in full swing, and this round leaned negative. The headliner was Netflix, which fell about 8% to an 18-month low, after its results roughly matched expectations, but its company outlook disappointed. The stock is now down about 20% this year, and the company announced a roughly $600 million deal for Gen AI. Startup Inter positive. It was not alone. Intuitive Surgical dropped about 10% despite beating, and Alcoa slipped even after a beat because it cut its output outlook, a recurring theme of good results being punished. The bright spots were health insurer United Health, which beat and jumped, and chipmaker Taiwan Semiconductor, whose blockbuster numbers still could not lift the falling chip sector. Today brings a lighter slate, with Travelers, Truist, and Fifth Third among the names reporting. The week ends with sellers having the last word despite inflation cooling nicely. Netflix tumbled 8%, and chips led a sector rout, while oil stayed near $85 due to two wars squeezing supply at once. Watch University of Michigan investor mood read later today for consumer health signals, plus whether Bitcoin defends 64,000 support level before weekend close tomorrow morning. Thanks for watching Market Pulse Daily.